Hello everyone and welcome. This is the Alpha House, a house of profits. We always know that we are here to minimize losses and to maximize profits. Guys, I'm going to give you one strategy today that is so easy, very easy strategy, and I'm going to take you guys step by step. Don't worry, we won't be needing indicators today. We're just going to be using a plain chart. So guys, before I forget, there is a PDF for the VIP secret strategy. This one is a secret I've been keeping for the past year. I've not shown anybody, so I'm going to leave the link for that PDF on the comment section. Make sure you buy that PDF. It's an extreme book, it's an amazing book, guys. Trust me, you get that book, you're going to be sorted. It's a secret VIP strategy. No one has ever gotten it before. I'm just going to release it to you guys. So now let's go to a plain chart like this. So what we are going to get here is that we are going to I'm going to show you guys step by step on how we really do this thing, because I don't want you guys to be lost. I want everyone to be in the open when it comes to this strategy. So let's say maybe we're having an uptrend like this. So this is what we call the key points or the key levels. So we just have to keep on marking those key levels. And let's say now we have got a barrier here and price is deciding to change course over here. So we're going to mark this last key level like this, and we just wait for price to come and cross that key level. So if price crosses that key level over there, so we are going to assume that we are having a reversal. So we are going to definitely start selling, or let's say things are not going that way. So let's say price was a little bit different and it was just going down. So we are having a downtrend like this. It's not that perfect, but you get the idea. So and then let's say now this is where the line is and price bounces here and goes up. So if now price bounces here, these are going to be our key levels, and we are going to mark this last key level like this. And if price gets over here and it turns back like that, it means that price is now having a reversal. So that is when we are going to start buying. So maybe someone is saying they're not seeing it well over here. So let's go to the chart and see if we can make it more simpler and more clearer over there. So let's get to the chart. So let's say the first thing that we have to do is to identify the trend, right? So we are having a downtrend right here. So you just have to identify the trend. So we are having a downtrend now, and you see this turning point down here, whereby now price is starting to change course and go up, right? But to be sure that price is really changing course, this is what we're going to do. You just have to zoom in a bit, and then you have to mark the key levels. Mark the key levels. For instance, this was one of them. We've got another one here. So price coming here and crossing that last key level like this, it means that price is now what is now changing course. It's now a reversal, so price is now going up. So you can start putting on your buy entries. You see, now I think it makes perfect sense now when we're doing it like that. Okay, let me just make another example. Let's say price over here. So price over here was going up, in as much as it was not a good one, because I want you to clearly see the trend so that you are not lost. So let us find a position whereby the trend was clear. I don't want you guys to be lost. So for instance, over here you can see that price kept on going up. Like here you can see price is going up, right? And it means we're having an uptrend, but we want to wait for a point where now price is going to change course and begin to go down, where we can now be able to sell. Okay, so when we got to this point over here, just up here, you can see this is our last key level. So this is our last key level, price going down just right here, and then price breaking the last key level over here, and then at this point we can now begin to sell again. So this thing is just basically it. So this thing is really not that complicated. You only look at a trend, price is going down, you wait for a reversal. So price is going down, you wait for a reversal, price goes up, you begin to buy. Simple. So the steps are simple. 1, you look for a trend, you identify a trend. 2, you look for a possible reversal, and then you mark that last key level and wait for price to change course. And after that, you are going to be sorted. Guys, if you feel like this information is very much important to you, then feel free to subscribe to our YouTube channel for more videos like this. And remember, on the comment section, I'm going to leave the link to the VIP secret strategy that has never been shown to you guys before. I'm going to show you guys on that PDF. It's so affordable. Go and check it out. So I'll be seeing you guys on the next video. See you next time. Bye bye. I removed the RSI, the moving average, and the one we're using last time, so those indicators are gone right now. So I removed them, and I want to show you guys on this amazing strategy. Okay, let me just start from maybe a clean sheet of paper like this one. So this is what we are going to do. What we are going to be using is what we call an alligator. So it's an alligator, and this is how it works. On the chart, it has got 3 lines, so you will find them just moving like this. They start on the same points, remember, and then they just go spreading around. There is a red one, there is a blue one, and there is a green one. So these 3 lines, they just work together to form the alligator. Now whenever you are going to see them doing like this, if you see them doing like this, opening up as it is opening this side, it means that price is either going up or price is going down. And if ever you are going to find the lines intersecting like this, so if you find them intersecting like that, it means that now price is ranging. So if price is ranging, it means whenever we see something like this on the chart, we just don't do anything. You just don't even touch that one, you don't even look at it. So what we mind is just only when the alligator begins to open. So whenever the alligator opens up, either maybe it is going down, it means you can be placing your sell entries. So and then if it is going up, maybe if it's going up, you're going to be placing your buy entries. That is how simple this thing is. So let's go back to the chart right now, because now I want to show you guys practically what I mean. So now remember, I said whenever you are going to see it like this, or see the lines intersecting like this, for instance in this place over here, so you can see, if ever you see it like that, it means that price is ranging. So if price is ranging like this, we are not doing anything. Just don't mind that one until you wait for price just to open up on this spot. You see now price is opening up. So if the alligator opens up like that, it means now I can place my trades. So if I can place my trades, it means I now know that price is, for instance over here, we know that now price is going down. So we are having a downtrend. It means we are going to be placing our sell entries, and you can place as many as you can. So long as the alligator is open, it is giving you clearance that price is going down. But before you can enter the second list of trades or the second entries you're going to make, you have got to make sure that at least you have got a bearish engulfing candle, or you have got 2 consecutive bearish candles. For instance over here we have got consistent bearish candles over there. And if ever you feel like you cannot see well, I'll just zoom it in for you so that you can see clearly. So this is what we call a consistent bearish candles, or you can just choose this bearish engulfing candle. Either way, you can just be using those to confirm if you can be entering your trades as price goes down. Now let's see, maybe for instance over here, just up here, so you can be placing your entry because the alligator is now open. So if it's open, you can place your entries over there, and price coming down over here. And if price is now like this down here, it means we are not minding that, and we're just going to wait for price to open up again at the point where I showed you last time. Basically this is what I'm doing. I'm just back testing the strategy to show you that this is how this thing works, and so that you can trust that this really works. So guys, as I said, whenever you see the alligator open, for instance over here, you can see the alligator is now opening up after having this dramatic scene over here. You can see that price was just ranging on like that. So if price was ranging, we leave that one until this opening now that we are having over there. Now you can place your first list of bullish entries. So you can just place your buy entry there, and you wait for price again, and you see now price is opening up again at this point. If it is opening up again, you place another pair of trades. Now since price was going up, now you can see at this point over here, price begins to do this ranging that it is doing. If ever price begins to range like that, what you are going to do is that you are just going to look for the last key level, and you just mark it on like that. So if I make my last key level like that, now if price is going to move from the top part and it comes and breaks the last key level, now I will make sure that I'm now placing sell entries, because price was bullish, remember, and now price is changing because it is coming back down. So that is how simple it is. This is so simple. Let's check from this side again. So let's look at the other one. This is USD JPY. So let's go to USD JPY and see if you can find examples from there. So on USD JPY, we've got numerous amazing examples over there. So let's start from down here, because it is good that you start it when price is ranging. So once price begins to range, that is where you are going to keep your focus. Just keep your focus on the price when after price is ranging. And now remember, I said after price has been ranging, you are going to wait for an opening. So the alligator is opening now here. Now the trick is you are going to look at the candles where the alligator is opening up. So the alligator is opening up over there at this point, and you can see that what we have are consecutive bullish candles. So we are having consecutive bullish candles. It means price will be going up, so price will be bullish. And now you can be placing your buy entries as simple as that, because you saw that there was a lot of consecutive bullish candles. Now let's say we want to place sell entries. So we're just going to come back again. Remember, I said what we watch for is when price is ranging. So that is our starting point. When price begins to range, that is where we take note and we mark that place. Now marking that place, you are going to place your last key level at the bottom and at the top. This is what we are going to do. So this is our bottom one and this is our top key level. Now if ever price goes up, it means price will be bullish. If price goes down, it means price will be bearish. Now when price has shown you that it is becoming bearish, for instance, you can see that the alligator is open over here, right, and price is going down. Why am I saying price is going down? It's because after opening, what we have are consecutive bearish candles. So what we have now are consecutive bearish candles, and they are saying price is going down. Guys, this thing is so simple. It can never be as easy as I'm explaining it to you right now. So I'm trying to break it down for you so that anyone and everyone can get this thing. The first step is to watch price after it has been ranging. If price has been ranging, for instance, this is the place where price was ranging, and now what we wait for is either a bullish engulfing candle or a bearish engulfing candle. If we've got a bearish engulfing candle, we are placing sell entries. If we've got bullish engulfing candles, we are placing buy entries. Now after price was ranging over here, you can see that what we have over here are bullish consecutive candles, and if it's like that, we are definitely buying. So we are definitely buying from there. But then if price after it was ranging over here, so if price was after ranging here and the alligator is open but price decides to go down and we've got bearish candles, we were going to place our sell entries. Guys, I'm trying to make this as simple as I can, as simple as I can. So we have got an intersection over here. So we have got an intersection of price here, as you can see. Let me use the pen. And then after that, what we have are just a lot of consecutive bearish candles. It means price will be going down. As simple as that. That is how it determines which entries are we going to be putting off. And as you can see, even here, although it was going to be a short trade, now you can see over here we have got price ranging, and after price has been ranging, when the alligator is opening now, what we have are bullish consecutive candles that giving us a confirmation price is going up. Guys, this is amazing. As you can see, we are still making profits. Wherever you are, after this go there, place your trades, put that alligator indicator. Maybe for the settings, those who don't know where to find the alligator, what you are going to do is to come up here. So we are going to come here and click there. The next thing you are going to do is that you're just going to come over here to the main function F here, and what you are going to do is to look for the alligator. It is under Bill Williams. So this is the alligator down here. It is under Bill Williams. As you can see, it's just at the bottom of the indicators. After you get to it, what you are going to do is just to click down here. So this is just where you click set to default. After setting to default, you click save. When you click save, you are going to have your alligator indicator on this side. See, we are still on our amazing indicator this side, which is called the alligator. So we're using the alligator, and let me just show you. Okay, right down here we've got, this is the RSI, and then on the inside it's the alligator, and also this one is the alligator. So this is how the alligator works, guys. It has got 3 lines: red, blue and green. So it's those 3 lines, and the alligator starts off here where it is closed, and once it opens up, for instance from this point going that side, it means now you can place your trade. It means now price is either going up or price is going down. And if ever you are going to find the lines doing something like this, so if you find the lines working on like this, this is what we call price range. So that is when price is just ranging over there, and that is where our starting point is. Otherwise we don't place any trades so long as price is still here, but we just wait for price to begin to be like that. And now we are just going to find it on the chart that maybe it is going like this. It means we are going to be placing our buy trades, and if it is going down, we are going to be placing our sell trades. That is basically how simple this thing is. Otherwise, the alligator is one of the most profitable ways on how to understand the market. So right now I'm just going to remove the RSI and the alligator down there. I'll just remove these two. Now I'll be left with just one alligator. So as you can see, now we are just left with only one alligator, and things this side are still going pretty amazingly well, as you can see. All right, now let's just choose one. Let's take the first one. So this is what is happening whenever price is ranging. For instance, like I told you over here, so you can see that price is ranging over here. What we are going to wait for is for price to open up. But whenever price ranges, what we are going to do is that we are going to look at the last key levels before price was ranging, the top one and the down one. So this one being the top one, as I had illustrated before, and this one being the lower one. Why am I doing this? Remember that price was ranging at this point. Now if price is going to open up after ranging, if price crosses the last key level going down, it means price will be selling. And if price crosses the last key level going up, it means price will be bullish. So that is the first thing we look at. Wait, after price has been ranging, we will mark the last 2 key levels, the top and the bottom, and then we wait for price to cross either of them. And after price crosses either of them, what we are going to do is to look for a confirmation. For instance, price has hit the upper key level over here, and what we are going to look for now, it's either we look for 2 consecutive bullish candles or a bullish engulfing candle. Now let's look at this. We can see 2 consecutive bullish candles here, and we can also see a bullish engulfing candle here. Either way, any of these two, and the availability of any of them is going to tell us that now we can place our buy entries. So you see how simple it is. We wait for price to range. After price begins to range, we look for the last key level going up before price was ranging, and the last key level before price was ranging going down. And when price crosses either of them, we wait for a bullish engulfing candle or two consecutive bullish candles, or we wait for a bearish engulfing candle or two consecutive bearish candles going down. Either way, we are going to know either we're going to be placing our buy entries or we're going to be placing our sell entries. That is how this thing works. Let's look for another example. So I have another example over here. As you can see, that price was ranging at this point. So we've got price ranging here. So if price is ranging here, we are going to look for the last key level up here and the last key level down here. Then after price finishes ranging, we are going to wait for price either to go down and cross the lower one or go up and cross the upper one. Either way, now price has crossed the lower one. What we are going to look for are a bearish engulfing candle or consecutive bearish candles, so that we know that we can really confirm we are going to be placing our sell trades. Now if you take a closer look, we have got consecutive bearish candles over here. So we have got consecutive bearish candles over here. Either way, we can just use them, or we can use that bearish engulfing candle that we had over there. Guys, this strategy is really simple. I just wanted to do it again because some people were asking questions that, okay, really, how does this thing work? So as I said, I always want everyone to be in the open. I want to take everyone with me. I just don't want to leave you in the dark. I don't want to leave you in the dark. Okay, let's make an example using this one. As you can see that we had price ranging at this point. So after price was ranging, this was our last key level down there, and this was our last key level over there. Now we had to wait for, okay, let me remove these arrows. So we had to wait for price. I'm just going to mark them, but now we're going to wait for price either to go down or price to go up. Either way, we are going to wait for it. And after price, as you can see that price just came and broke the lower key level, what we are going to do as a confirmation that really price is going down, it's either we find a bearish engulfing candle or we find consecutive bearish candles. Now let's see what we found here. We have got a bearish engulfing candle over here. At this point, we've got a bearish engulfing candle, or we have got consecutive bearish candles over here. This is how easy it is. And if you are so confident that, okay, price is going down, for instance, let me just go back a little bit. So now as you can see that really price is going down, you can keep on adding other trades so long as it is still open. So long as price is still open, as long as the alligator is open, you can continue placing your trades going down, and you might consider just increasing your lot size over there to give you another amazing simple strategy that you guys can use. And you are definitely going to be mind blown today, because what I've got in store for you is really mind blowing. If you have not subscribed to this channel, you better subscribe right now. Yes, hit the subscribe button now before I continue. All right, let's get to it. This is a phone strategy. This is a mobile phone, so it is going to be as simple as it can be. So this side, what we have is just three simple indicators: the moving average, RSI, and the stochastic oscillator. And guys, we have seen what I can do with the RSI and the moving average. So today I'm going to show you guys what you can do with these three. It's going to be mega. So firstly, I'm going to give you guys the settings. So let's go to the settings first. So first thing you're going to do is that you're going to come up here to the main function F over here, and then you're going to click on moving average. So on the moving average, I want you to enter period 70, shift, leave it 0, method exponential, apply to close, then levels, just leave them like that. And basically that's it for the moving average. We only need the period there. So the next thing you're going to do is to go back to the main function F again and take on relative strength index. And when you get to relative strength index, today I want you to enter period 1, apply to close, and then for the levels, to those who are still new, this is where you enter the levels. Just click on that plus sign, and then you're going to be able to add another one. So I want us to take it to 95, 80, 0, 50, 20, 10. Then click save. Make sure you click save, because if you don't, it won't appear like that. And then for the style, make sure that it is as visible as it can be, so you can just choose from all those styles down there. I'm using the blue color for myself. Then you're going to click save. So the next thing you're going to do is that this time around, you are not going to go to the main function F. We are going to go to indicator window 1. So when you get to indicator window 1, click on stochastic oscillator, and then for this one, just set to default. Just click down here. There is a button for set to default there, so just click that one, and then you're going to click save. That is how you're going to be able to get to this one. Now let's get to business. How does this really work? All right, let me just take you through it. So the first confirmation that you're going to make over here is that you are going to use the moving average. So the moving average is going to operate in two ways. Simply put, when the moving average is below, so basically, as you can see over here, it is below the price movement. If it is below the price movement, it means that there is an uptrend. Then if the moving average is now above the price, like here, it is above, as you can see, price is just around here. So if it is like that, it means that there is a downtrend, as simple as that. So those, you just master those two, and then you're good to go. Now, in fact, that's just the first confirmation. So the next confirmation you're going to make is coming down here on the stochastic oscillator and the RSI. So as you can see, we've got period 95, 80, 50, 20, 10. So the highest, these highs over here, these are our selling points, and then these lows over here, these are our buying points. So most of you already know, because you've watched the previous videos. So these are our selling points. So now, if these are our selling points, it means whenever we are going to see price just moving slightly above 80 over here, we are now able to sell. For instance, let's just make a confirmation using this one. So as you can see, this is 80 over here, and if it is 80 over there, and looking at the moving average over there, it has just changed course. Because if you can just zoom it a bit so that you guys can have a clearer picture, so I can zoom it like this, you can see that it has just changed course over this place over here, you can see, and then it was now coming to be below, it was now above the price. So if price is now below, it means that we're having a downtrend. That is why we were selling at that point. And as you can see, it was so precise that price continued to go down, and as you can see, it stayed a while down here on our buy setup. So then price now came and hit just down here at the 10 line level. So price hitting the 10 line level, that is a confirmation for you that we are about to have a reversal, and price is reversing over here. As you can see, price started getting bullish. So now if price is going bullish, it means we can now buy at this point over here. But let's just wait for it to get to the 20 line level first before you can just make any rational decision over there. As you can see, price began to be bullish after making that buy entry. It goes all the way up there. So as you can see, during the course of that session, you can see that there was an intermediate movement of price, like from instance like here and right here. So it's as if the moving average is just like in the middle of the buy area and the sell area, which is good. That means price is ranging during a time like this, and we're just going to wait for the breakout. And as you could see, we had a major breakout. Let me just zoom it in for you. So we had a major breakout after doing all those zigzags, you can see, because we have to make sure that you get this as simply as you can. So it was like this. So our breakout point was just over here, where now price is going out, and after that it was continuing to be bullish. Basically, that is how you master these two, and you're able to make such tremendous profits. Trust me, this is so wonderful, and we're just growing this small account day by day, bit by bit, and I've been showing you guys all over here. So next week I'm going to show you guys all another amazing strategies from here. If you don't want to miss out, make sure you hit that like button and that subscribe button. I'll see you guys on the next video. You take care over there. Bye bye now.